It's such a pleasure to be joining you right here on the India Development Debate on ET Now. I'm Supriya Srinath, and straight on to a big story right here that we are tracking, and this is going to have ramifications not just for macro but microeconomy as well. Oil is making headlines again, and this time around all eyes are on the Vienna meet of OPEC, the big oil cartel, ahead of the final decision tomorrow. Saudi Arabia has indicated that it is ready for an output cut of 1 million barrels of oil per day to strike a balance between demand and supply. Oil prices drifted lower in international market, Brent slipping below the $60 a barrel mark, investors betting on steeper reduction. While the other members are seeking more output curbs, it is the pressure from Washington that is holding back Saudi Arabia from moving in that direction. There is also the threat of sanctions of Iran oil buyers, although the US has allowed 7 countries, including India, to keep the taps open. The stakes are high for India because the big shift in OPEC strategy could adversely affect our twin deficit pictures, both current as well as fiscal. The recent meltdown in oil prices has come as a blessing for the Modi government. The RBI called it a tailwind, keeping growth numbers intact at 7.4% and also keeping inflation projections benign. Coming ahead of the election season, the signals from Vienna is critical for Prime Minister Modi's economic managers, and that's what we're discussing right here on the India Development Debate this evening. But the big development of this hour is the arrest of the Huawei CFO and also the daughter of the founder of Huawei, and that is bound to stoke tensions between between the US and China. And clearly Iran sanctions is the big cause there, and the US is not going to sit quiet. Saurabh Chandra, former Secretary Ministry of Petroleum and Natural Gas, joins us right here. Peter McGuire, Chief Executive Officer, XM Australia, Vandana Hari, founder and CEO, Vanda Insight, and Maithili Busnur Mata, consulting editor. So thank you, each one of you, for being with us. And Mr. Chandra, if I may begin with you, it seems evident that there will be a supply cut. Okay, give me a minute. I think Peter's here with us, and I'll just go across to Peter McGuire before I come to you. And Peter, it seems evident that there will be a supply cut. Most people are betting between 1 million to 1.3 million barrels of oil per day. How big will the impact be on oil prices, and how are you going to read into news that's just coming in? The arrest of the daughter of the Huawei founder as well as the CFO. This is bound to not just stoke tension between the two powers, US and China, but done allegedly on grounds of Iran oil sanctions being violated. And it clearly looks like the US is not going to take that lying down too kindly.
No, well, first off, I think we'll answer the price of crude and those 1 to 1.3 million sort of headline number as far as cuts. There's no doubt it's going to affect the market. There is no agreement currently, but that will be fleshed out, they're saying, over the next matter of 24 hours or less. And the more important thing I think that's got to be understood is that you've got this time round, you've got increased production coming out of the United States. Over the last couple of years, I don't think you've had an active president from the United States taking such a huge interest in OPEC. And I feel as though that's one of the key fabrics of keeping this meeting a little bit not ironed out, or more in turn creating that deal tension to the last very minute. And it's got the feeling and the flavour of President Trump over it.
Okay, hold on for a minute and I'll go across to Maithili Busnur Mata. And Maithili, we were having a chat about Iran and how US is not going to take any of these things lying down, especially given the fact that, this is bound to create trade tension. This is bound to create a controversy between US and China. How are you going to read the big development of the hour, which is the arrest of the daughter as well as the CFO? And this is obviously being done on grounds of Iran sanction violation. And it's not as if they had smoked the peace pipe. There was just a temporary ceasefire, and now we see this happen. And most people expect China to react.
Well, it does cast a shadow. Oh yes, of course, and it does cast a shadow over the future of what happens to oil prices, because remember, Iran has given India and some other countries waivers from its sanctions, but these waivers are only till March. So if the US is going to come down so harshly on any violations whatsoever, unlike in the past where the US was willing to look the other way and India was able to get away relatively lightly, it is going to impact us very hard. So we'll have to wait and see what happens tomorrow, how much this overshadows the entire development, because remember, President Trump was also keen that oil prices should not be kept high. He wanted oil prices to fall, which is why when he saw oil prices falling, he was quite happy. But the OPEC and its allies were clearly not happy, and they wanted to cut production. But now that this development of the arrest of the Huawei CFO is going to cast a shadow over all the global economy. We've already seen the Sensex and stock markets across the world react, and for India this will be particularly bad news if it impacts oil prices, if it increases trade tensions, and that, I think it completely changed the macroeconomics of the country completely.
No, absolutely, and we are importers of almost 80% of our oil. I just get to that in a bit, but Mr. Saurabh Chandra, US has allowed 7 countries, including India, to go ahead and buy oil from Iran. In some sense, we will, of course, be impacted by what happens at the decision in Vienna, but imports from Iran are at a much lower rate. Given the fact that we've been asked to, there is a sanction that we have, waiver, how gravely could our growth be impacted? Because just yesterday at the RBI, oil was being talked about as the big bonanza. It was being talked up as the big tailwind. It made the RBI keep inflation projections downwards. It made RBI keep growth intact at 7.4% projections. Suddenly, it seems the picture could change for the macroeconomy.
It's a brave man who would like to predict oil prices. And we are heading for times of uncertainty. OPEC will probably go in for a production cut of more than 1 million barrels. The issue is how will it be divided? Because OPEC itself is facing an existential problem. Qatar has walked out. Iraq cannot take any more cuts. Venezuela will probably not agree to too many cuts. And a cartel has 3 characteristics. The first one being a dominant position, which OPEC plus Russia is. There have to be entry barriers, which there are because the cost of production is much lower than what it is in other areas. And thirdly, the most important is discipline. Now, will this discipline hold on? Ever since these production cuts were imposed in January 2017, the compliance has been there, but it's nothing to write home about. So now that is part one of it. The decision of oil prices is effectively between President Trump and President Putin. Saudi Arabia's maneuverability is limited, especially after what has happened in the Turkish embassy after Khashoggi's death. They are on the back foot. And all this has to be read in the context of the agreement that USA had with the House of Saud in 1976, and then the Reagan corollary doctrine to what Carter did. So this has to be read in that historical context, but Saudi Arabia's degrees of freedom are very limited.
But that's exactly my question to Vandana Hari. And Vandana, with the non-committal stance of Russia and pressure from the United States, Iran's in a precarious situation and position. And I kind of agree with Mr. Chandra out there that, Saudi Arabia has limited maneuverability. How far can it sustain a cut, or for that matter, go ahead with one?
Vandana. I think OPEC's life has just become way more complicated, as we've just been discussing your other guests, how the relationship between U.S. and Saudis has changed, how the Saudis need to maneuver much more carefully going forward. And it seems to me that the relationship between the Saudis and the Russians is also about to enter a completely new chapter. So we've heard in recent weeks that the Russians have agreed to sign a long-term cooperation agreement. And I can't help but think that, what are they getting in return for it? Surely they'll ask for something and back home, when Alexander Novak, the Russian energy minister, goes back, and he's been under constant pressure from Russian oil companies to be freed of these restraints. Right from the end of last year, actually, the Russian companies were saying they're happy with how prices have climbed, and can we just walk out of this now? So it's going to be, I think, a far more uncertain, unpredictable, and complex world, even though on the surface it seems that it should be good now. OPEC and non-OPEC are entering a long-term agreement, but it's going to be anything but a smooth passage from here. Also because the external elements are just stacked up in terms of unpredictability against them, whether you talk of supply from outside this OPEC, non-OPEC group, or you talk about demand. So I think OPEC is going to have to just completely evolve and grow further. I think there's going to be new challenges in its way in 2019.
Okay, just give me a minute now because I want to take this across to Peter. And Peter, like both Mr. Chandra and Vandana have said, OPEC itself is a divided house. Nigeria is resisting. Qatar is threatening to pull out. I know Qatar is a small producer, is moving towards LNG, but is oil market going to be, I mean, is this divided oil market going to mean a different thing for oil prices around the world? This is not the same cartel that it once was.
No, I don't think it is the same cartel, and this has all changed over the last probably 6 to 12 months. We haven't had a US president that's been on the front foot as far as energy and to the level of President Trump. But also another thing that really needs to be taken into consideration is the huge uptick as far as crude production and shale production, naturally, out of the US. Now, this is unheralded. 10 years ago, their production was, in infancy. 15 years ago, they weren't even a player. Now, with the rig count and what you've got as far as, growing demand, they're not only a player in the market, but they're equal first with Russia and Saudi. So they've really got a big, big presence on Main Street. And naturally, they're valued in US dollars. People are worried about the yield curve. People are worried about what's happening. Are we heading for some form of recession or slowdown growth across the world in 2019? Have a look at the Chinese stock market. You can't say that hasn't been a surprise to everyone. It's really, this year has been an absolute terrible situation for them. Next part is you've had increased volatility in the last 2 months from equity markets. October was an absolute minefield. If you look at the equity markets, and November really it flattened out a little bit. Today the Dow's down 500, then it's down 300. You've got crude prices down 2 to 3.5%, 4%. So they're volatile nature, and I think that's really been washed over the market. So those sort of frameworks, I think, are far different this time round versus what we've experienced over the last 4 to 6 years with a growing global economy.
Right. Okay. Maithili, I want to push the focus back to India. And, just as trade was, oil was turning out to be a tailwind, there are going to be fresh concerns because October trade deficit numbers for India were at a 5-month high and, crude oil imports did add to that. I'm presuming November is going to be a little better, but then the period where if prices do go up, if production is cut indeed, will have a direct impact on not just the trade deficit, but CAD and I'm presuming the fisc as well. Given the fact that, we are in an election year, how is this oil math and the dynamic really going to play out for our deficits? I'm presuming for the FISC, the government is committed. 3.3 may look daunting and challenging, but they're committed to meeting it. The PFC-REC deal that has just been announced is going to be one way to fill the coffers. But I'm just talking it from an external trade point of view. How much of a very active dynamic role is oil going to play?
Oil, Supriya, as far as India is concerned, is one commodity which has the ability to either make or mar India's economic fortunes. If oil prices are benign, then the Indian economy almost invariably does well. But when oil prices rise, it has an implication for India's inflation, our trade deficit and current account deficit, our fiscal deficit. So it has the ability to really completely change India's fortunes, as it were. And just when it seemed that, the things were turning around in Indians' favor, the government was getting lucky again when oil prices were falling. Now we have this double whammy of rising trade tensions. You have the worry about oil prices rising. And remember, the winter months are always the months when demand picks up in the West because of winter, the severity of winter, depending on the severity of winter. So there's a natural tendency for oil prices to rise. Yes, production is improved, and yes, the global economy might slow down a little bit, but any rise in oil prices beyond, say, the $75 $1 to the barrel mark does have enormous implications for India. And given the fact that we are going in for elections just a few months down the line, it hugely cuts the degrees of freedom available to the government. In the past, when oil prices rose, government was able to stand its ground and say, okay, you can pass through the higher oil prices to consumers. Now it's going to be much, much more difficult. Of course, inflation is low at the moment, but as I said, things are changing so dramatically and so quickly that any government in India would be very, very worried.
Vandana, Hari, want you to come in on that aspect, and I know, crude oil is a big determinant as far as our external trade or internal fisc is concerned, but given the fact that we are large importers of oil, can the government or the central bank at all be sanguine about oil prices? Because, I was at the RBI yesterday and it almost seemed that we won the war against inflation and, it's about time we will achieve the 7.4% growth, and it was all hinged upon food prices as far as inflation is concerned, and of course a very benign oil price regime. And everybody was talking how oil has moved from 85 last policy to 60 this policy. That picture could significantly change between the 5th and the 7th of Feb when the MPC meets next in RBI, will it not?
Yeah, absolutely. The oil prices rising to 4-year highs, and we saw Brent at 86 not long ago. Absolutely put India through the ringer. So, we discussed on your channel as well, the double whammy of a weaker rupee and higher oil prices. Now, of course, there's been a considerable relief, and again, the two have been slightly connected as well. So a decline in oil prices has also brought some relief and propped up the rupee a little bit. I guess now the biggest concern for the Indian government going forward into 2019 is going to be, again, what is the rupee going to look like and what are oil prices going to look like. Now, as far as oil prices are concerned, I think the greater worry for mid to long-term planners, policymakers, is going to be volatility. I just see 2019, as we are sitting here today and looking at it from what we can see and what we do know about it, is that it's going to be hugely unpredictable. As far as OPEC is concerned, I do think that they will do their best not to shock the market. When I say that, I mean specifically the consumer. So we do have, as Peter laid out, we have a U.S. president on their tail all the time. But I think they have also been very carefully listening to major consuming countries in Asia this year as well. Everything taken together, and we've seen the Saudi energy minister's comments today as well, whether you say it was because of the Khashoggi affair or whether he's, really wants to be more considerate towards consumer countries. But the fact remains, I think that they have learned their lesson. They over-tightened accidentally, I would say, in the first half of this year, and they're going to try and avoid that. So high 70s, 80s, I don't think is a danger. I think India can afford to relax a little bit. I'm not an expert on foreign exchange, but, so I can't say exactly what the rupee will do. But again, from what I can see, the expectations for the Fed rate hikes in next year are also being tempered now. I mean, this evening I'm listening to experts saying there may be no hikes at all. So I think the rupee may get a bit of relief as well.
No, absolutely, and I think rupee will be a corollary that we will have to discuss going forward. But Mr. Chandra, current excise duty is fixed at 17.98 per litre as far as petrol is concerned. I think it's close to 13.83, if I'm not wrong, for every litre of diesel. An increase in Brent, I'm presuming, will obviously lead to an increase in petrol and diesel prices on the pumps. Now, in an election, the government so far has said no cut in excise and all of that. They did so last year. I mean, they did so sometime back. But in an election year, can they resist the temptation of not passing that on? And what will this really mean both for the oil dynamic as well for the fiscal math?
I hope and wish that they do not cut excise duty anymore, because the fiscals do not allow it. The LPG subsidy needs additional provisioning already. If they reduce excise further, each rupee would mean 13,000 crore over the year. So maybe for this fiscal year it may mean a little less, but the government cannot afford it. With the GST revenues not being what they were expected to be, there is very little scope for reducing excise duty. But our best bet is President Trump's domestic compulsion and the fact that oil has a global price. If prices go up, so would the pump prices in the US, which I do not think he can afford. And my guess is he would like WTI to be around $60 plus minus 10%. And the differential between WTI and Brent has been about $10. So the ceiling for him would perhaps be $75 for Brent. That's how I look at it.
Okay, so for him, the ceiling would be $75 a barrel for Brent. Peter, very quickly, I need to wrap this in just a bit. But is oil really going to be a function going forward, not of what the OPEC or the non-OPEC cartels do, but a function of what the US president wants, and where does he see the level of oil, being in a comfortable range?
I truly believe that President Trump is the ace card here. I feel as though that his mantra is a global mantra in the sense of energy pricing. He has changed or deconstructed the framework as far as oil pricing, because he is such a negotiator, and he's an unusual. We're seeing that with trade talks with China. Everyone understands the way that he works. I mean, there wouldn't have been a US president ever to do a tweet as far as oil prices. He's done 9 this year. He's on the front foot, and he's changing the way that the world works. And he has one agenda, and that is to get back in power in 2 years' time in the next elections. He doesn't want high oil prices. He's conscious as far as economic growth. He's worried about US interest rates. Have a look what he's done as far as Jerome Powell and the Fed. The jawboning there. Well, I'll tell you what, he's actually been able to get some action there. It'll be very hard for the US Fed, I think, to have 3 rate rises in 2019. And it'll be interesting to see what he does as crude oil prices. I think the WTI is going to be contained, and it'll be a $45 to $55 maximum. And I think that Brent will be lucky to hit 63, 64 over the first 3 to 4 months of 19. So that's my, I suppose, stick in the sand as far as pricing. It's hard to put a ceiling on it, but I think there's so many moving parts that haven't been considered. And this time round, everything on Main Street is different.
Okay, all right. On that note, completely out of time here, but thank you very, very much, Mr. Saurabh Chandra, Vandana Hari, Peter McGuire, and of course, Maithili Busnurmat for joining us. We take a quick breather and we are back with the other fascinating discussion. It continues to be in the limelight. This is making headlines here in India, the Augusta Westland chopper scam, and of course, with Christian Michel now in India. What does this mean for politics ahead?